Hello and welcome to this week's Montgomery Minute for Businesses. All right, in New Mexico, we have this wonderful thing called the New Mexico gross receipts tax. And obviously, I say that facetiously. All of you know how much I hate that tax. It's one of the worst taxes in the whole country is our gross receipts tax here in New Mexico. But what everybody needs to keep in mind, if you have a business, okay, if you have an LLC, um, even if it's a single member LLC that doesn't do much, all businesses in New Mexico have to file and report gross receipts tax. The most infrequent filing they allow is every 6 months. Okay. It doesn't matter if you do not collect gross receipts tax. You still have to file and report your gross receipts. So we reach out to many of our clients with a standard checklist email that says, how much was your gross receipts tax? And we ask for that information. Many clients reply and they say, we don't have to do that. We don't, nothing we do is subject to gross receipts tax. Well, part of that is true. You might be a property investor. You might own properties and all of your income is rent income, all right? Rent income is not subject to the gross receipts tax here in New Mexico, all right? So many of you think that you don't have to file and report gross receipts tax. That is wrong. You have to file and report your gross receipts tax. You have to file and report those rents, okay, that you collected, or whatever it is that you may be in the business of that is not subject to the New Mexico gross receipts tax, okay? We still have to file and report. It's a legal requirement, okay? It's a law in New Mexico that your business has to file and report, even if all your income is exempt. One of the key reasons why we have to do this, not only is it a law in New Mexico for businesses, but New Mexico and the IRS share their tax return databases with each other. They cross-check, they balance, okay? They're connected. So when we do your business tax return and we report that total income to the IRS shares that total income with New Mexico. New Mexico's system makes sure that verifies that that income was reported in the gross receipts tax system, okay? If you did not report that income that you reported to the feds on your federal tax return, if you did not report that to New Mexico in gross receipts tax filings throughout the year, then you're going to get a penalty notice from New Mexico, okay? They're going to assume they get to tax that. They're going to assess a tax on it, and you're going to get a penalty notice, all right? And then you have to go through all the trouble of trying to combat that penalty notice, okay? So keep your life simple. Report your gross receipts tax, your gross receipts, even if none of it is subject to tax. Obviously, we do that for all of our clients. We're reaching out to you to find out how much you collected in revenue during the previous period. Simply reply to us and we do that filing for you, okay? It's not going to cost you any tax. We know that it's exempt and you're not going to pay any tax on it. But what's important to us is that those two systems are going to balance at the end of the year. When we do your corporate tax return, we want to make sure that when the IRS reports that money, that information to New Mexico is going to already have that same number in their gross receipts tax reporting system. Thanks for watching this week's Montgomery Minute for Businesses.